How's it going? It's Rocky. Welcome to week number 13 of the $2,000 weekly challenge. Every Friday, we review our weekly account statement from trading the micro E-mini and the E-mini futures. We also normally review some of our trades, but for today, I'm going to do something a little different and show you exactly why I chose to trade the Dow Jones Industrial Average, or DYM. Please check out the timestamps in the description below if you'd like to jump to the area that you're most interested in. Our goal with this challenge is to earn an income of $2,000 every week through the common strategy utilizing the MACD and the stochastic RSI, with a time-based chart, which we see on the left here, of 5 minutes, and a tick-based chart, which I have on the right here, utilizing 512 ticks. Details of my strategy is listed on the description below, so please check it out, and are also mentioned through examples in most of the content we've released so far. Keep in mind that my trading is not the right or the wrong way of doing things. It's a strategy that I've become accustomed to and I've backtested and try to improve over time with the help of the community or really just my research from books I read or anything I find on YouTube. I recommend that you should also develop a system that you are comfortable with. And also just want to put it out there, I do not have a chat room and I'm not trying to sell a course. I'm just enjoying sharing this content with everyone and learning from the community. So if you have any suggestions, please let me know on the comments section below. And also if you enjoy what you're seeing and you're learning something, please do subscribe. It does help me out to my goal of reaching at least 1,000 subscribers someday. So what you're seeing here are my trades for this week. It is a short week with Good Friday today, Friday. So the market is closed. So right now it's April 2nd, 7:44 in the morning. So I am recording it much earlier than usual because the market is closed. And if we go on Active Trader, you will see that there is some movement, as you can tell right there, but definitely not a lot of movement at all because the market is closed for the US. And just wanted to be able to show you, I had some good trades, some really bad trades, which I denote with this gray circle here, but I'm not going to go into too much detail about that. I'm just going to do a account statement review, and as I mentioned later in the content, I'm going to show you on Excel exactly why I'm trading the Dow Jones Industrial Average. So for this week, unfortunately, we did not reach our goal of $2,000. It is a short week and I made some silly trades that I'm aware of, but it's still a problem that I'm trying to fix. However, we did reach $1,690.19 from 4 days of trading, and that consisted of 2 green days and 2 red days, with my best day being $2,000.89 and my worst day being a negative $869. Now for transparency, here is our account statement. And then I show this not to boast or anything like that. It really just helps me because it's like a diary for myself. And also, it's also a way to convince people, well, maybe not really to convince, but to show people that the strategy is working itself, because it only shows that it's really working if you're making actual money. So that's the main reason why I'm showing this. And then eventually when we reach a certain number, I'll probably get to a point where I'll phase it out and I will no longer be showing what our weekly gain is. But if you find it useful, I'll try to keep this as well. So if you look at our statement here, you can see that we had a mark to market here and another mark to market right here. So mark to market is when I hold a trade past the 1:15 p.m. on the Pacific time, because either I got stuck on a trade that I wasn't happy with, or one of my biggest weaknesses, which is not cutting my losses quick enough, which is something that I'm really doing my best to work on. And if you have any suggestions on how to overcome that psychology or maybe a strategy, please do let me know and be more than happy to try it out. So for this week, we had an ending cash of $23,206 $1,022.22. And we did not make any deposit or withdrawals. And our starting cash was $21,516.03. So that's how we came up with our net weekly total of $1,690.19. And then something I like to do to keep it into perspective is just to convert that to what a regular 9 to 5 per hour rate would be. And then let's just say, high level, we'll still say it's a 40-hour week, even though we have Good Friday off. So some people do have it as a holiday, some people don't. But anyway, just for simplicity's sake, we're going to divide that by 40 hours. So for this week, we had an hourly rate of about $42.25. Next, I'm going to go through exactly why I picked the Dow Jones Industrial Average. So on the active trader here in the center, you could play around with the number of contracts that you're willing to trade. For example, if you're willing to trade one contract, and there's a question mark to the left that you can click on. And if you click on it, you can see that the value of a tick, which is just one tick, which is 1 point for the Dow Jones Industrial Average, is $5. And this is the E-mini. So the margin requirement for this is $9,500. Now let's compare that with the micro for the Dow Jones Industrial Average. And for the micro itself, for one contract, the tick is 50 cents, so 1/10 of the E-mini, and your margin requirements is $990, which is 1/10 again of the E-mini itself. So here is the Excel sheet that I did to help me recognize which made more sense for me to trade itself. And I'm going to go through this Excel sheet so you're familiarizing yourself with it. So I listed the 3 indexes here. I didn't include the Russell 2000 because I didn't trade it much. I only traded it probably once, and it just wasn't a good match for me. I have traded the Dow Jones Industrial Average, the S&P 500, and the NASDAQ in the past, and now I just exclusively trade the Dow Jones Industrial Average itself. So I've both listed the micros here, so MYM, MES, and MNQ, and also the E-mini, which is times 10, YM, ES, and the NQ. And what we're going to do here is let's just say you had $5,000 in cash, and that's the number I placed in here. And with this $5,000 in cash, it shows me how many shares or number of contracts I'm able to afford for each of the index. So for the Dow Jones, I can do up to 5. And then as you can see on this column here, I listed what the margin cost is. And margin is for futures a little different from stocks. To make it simpler, I just think of it as your cash balance. So have at least that certain amount for your cash balance itself. So for the Dow Jones, as you can tell, it's a lot cheaper compared to the other ones. One contract of micro Dow Jones is $990 compared to the others, which is $1,210 for the MES and then $1,760 for the MNQ itself. And then next, what I did was I listed the last price that each future index closed at yesterday, and those are the numbers there. For the Dow Jones Industrial Average, it closed yesterday at 33,037. The ES at 4,990. I'm a little confused about the 90 cents, but that is the number I saw for the close yesterday. And then for the NASDAQ, it closed at $13,316. So I broke it down here in percentages because that's just how my brain works. Conservatively, it's rare that you see 1% days unless you have very volatile days in the market. So conservatively, you could say, 0.5% makes more sense. But just for this exercise, we're just going to deal with 0.1%. So what that means is a $33 move consists of 0.1% for the Dow Jones. A $4 move consists of 0.1% for the MES, and a $13 move would be a 0.1% for the MNQ itself. So I am going to highlight those for now, and we will come back to exactly why we are mentioning those numbers. So now let's discuss the value per tick for each one of those. So for the MYM, a value per tick for the Dow Jones is 50 cents. And then for the MES, a value for each tick is $1.25 for the micro. And with the MES, it goes in increments of 25 cents. So that's why I highlighted every 4. So what that means is for every 4 ticks is equals to 1 point. Another reason why I don't really like trading the MES, MNQ, it's really hard for me to keep track on the math. But if you think of it on tick counts, it should be a lot easier to trade it itself. And it's the same for the MNQ as well. It's also 4 ticks to 1 point. But for every tick count, it's 50 cents for the MNQ itself. And then I have a line here, which is the sunk cost. And the sunk cost is essentially the commissions and fees itself. So what that means is with the $5,000 that we have, and you bought 5 contracts, your sunk cost back and forth, commissions and fees for 5 of those would be $25.20. And in that same logic, for the MES, if you had $5,000 for 4 contracts, that would give you sunk cost of $20.16. And for MNQ, for 2 contracts, that gives you a sunk cost of $10.08. So earlier on, when I was scaling up, I was trading the micro futures. So this is high level, but what we're doing here is to essentially see what our profit is by reaching 0.1%. So I'm not trying to say that all these indexes move the same way, because sometimes the MYM could be up and the ES and the NASDAQ could be down. So that's not what I'm trying to say here. So it's really up to you to know the index you're trading, and you can sort of see a pattern compared to the others. But high level, basically I'm trying to show you how much profit you can get from $5,000 and trying to achieve 0.1%. So with the MYM, 0.1% would take 33 points. So with 33 points, that would give us $57.33 for the MYM. Now for the MES, with 4 contracts using, again, $5,000, to reach 0.1%, you will need 4 points. And with the MES, 4 ticks is equal to 1 point. So essentially for 4 points, that would be 16 ticks. So let's go down to the tick count. So 16 ticks is roughly $59.84. And that's actually a lot more than the Dow Jones Industrial Average equivalent. And then next, for the NASDAQ itself, again, for $5,000, you'd be able to afford 2 contracts, and you would need 13.32 points for it. And with the NASDAQ, it's also similar. For 4 ticks is equal to 1 point. And then let's just do the math here. 13.32 times 4. So you would need about 53.2 points. Ticks, sorry, 53.2 ticks for 13.32 points. So 53 ticks will get us to, right here, 53 ticks, $42.92. So if we were to compare that, I just find that, ES actually is actually more profitable, but I became comfortable with the Dow Jones, and the math, it was just easier for me to visualize the math. So that's why I traded it. But one can argue that NASDAQ actually moves a lot quicker. It's a lot more volatile than this, so you could earn a lot more. So it really goes with your comfort zone itself. And let me do another analysis here. So our ending cash this week was $23,206.22. So this is why I now trade the E-minis, because it will cost me less if you compare the sunk cost. If I did only the micros, it cost me $115.92 before I'm break even, but it's just $14 if I'm trading the E-mini itself. And essentially, let's go through the same logic here. So for point 1, it would be, it'd be 33 points. And with that 33 points itself, I could make $360 trading the YM as compared to $263.58 for the MYM. And if we were to check on the ES, I would actually be making less if I traded the ES, but that's because I could only afford one contract. And then for the NASDAQ, I could only afford only one contract as well. And that would, earn you roughly about the same. But right now with my comfort zone, I do 2 contracts. That's the max I could do because that's all I have. And I'm really trying to scale up as much as I can and using the same strategy. And yep, that's the reason why I trade the Dow Jones Industrial Average. It's just the math makes more sense for me and it's just more profitable. And essentially, that's my reasoning for it. And hopefully you found that very helpful. It's just one way of thinking how to trade on percentage-wise. Some people also think of it as how many points you're trying to hit. And some people really just look at the chart and see what the chart is giving you. Lots of strategies. There's no right or wrong way, but my only suggestion is to be consistent, find one that works. But if you have a bad day, don't blow it up and try a whole new thing. Just try to figure out what the root cause was and make little adjustments and stick to it, and you'd be more successful that way. Anyway, thank you for checking out my content today. If you learned something and you enjoyed what you saw, please do subscribe. And if not, please do check out our future content and give me a chance to see if you'll learn something then. All right, have a good one.